Hello everyone, our group will be presenting Twitter as a IPO case analysis. Twitter was founded in 2006 by four founders. It was originally an idea of an individual using as SMS service in a small groups. It wasn't clear what it was at the beginning. They called itself as a microblogging social network, but eventually Twitter distinguished itself from the beginning because it's described as a status update and social utility. This is the reason they can put a position as a Twitter in the social market. It has a main headquarters in San Francisco, California. Twitter is a platform for public self-expression and conversation in real time. It has users from every group of people around the globe. Also, easy access for the user because it's available from anywhere, such as mobile application and website based. About company IPO situation. On the September 12, 2013, it filed paper with SEC, and then a month later, it did an amendment to the SEC S1 filing. Eventually, on the November 6, it went publicly trade at price of $26 with 70 million shares. And on November 7, on the first day of trading, the price closed at $44.90 with market capitalization of $24 billion.
Next part is the reasons why Twitter decided to IPO. And the first reason is they want to increase the capitalization and financial flexibility. And the next answer, the most important one, is the conditions for social media IPO are as just about as good as they could get. And it shows a graph about the stock movement of three biggest names in the social medias like Facebook, LinkedIn, and Yelp. So from the beginning, from the time they begin to IPO until 2000 until now, all the stock price increased more than 23%, and about Facebook is selling up 150%. And the next reason is the number of IPO filings is going up overall. The filing through August 2013 increased more than 40% compared with the same time period of previous year. And Twitter also wants to show investors a separating growth in its business, unlike Facebook, whose growth appeared to be slowing during the run-up to its IPO. The industry analysts estimate the solid growth in Twitter business over the next year. The revenue earned from the value of $10 billion is 250 million in 2012 is up to 500 million in 2013 and estimate 1 billion in 2014. One of the key areas Twitter is growing in is mobile, which also gives it an edge in its IPO process. More than half of its annual revenue driven by smartphone and tablets. And the last reason is Twitter can take advantage of Job Act, a new feature in stock market. If its annual revenue is less than 1 billion, the Job Act allows companies to work with regulators on its plan before actually making them public. The next part is the use of process. Twitter raised $1.82 billion in its IPO, so they decided to use the net process for general corporate purposes, such as they raised capital expenditures in 2013 of 225 million to 275 million, and they fund anticipated capital expenditures, and they decide to certify the anticipated tax withholding and remittance obligations. They also allow employees who are not executive officers holding certain awards to sell shares of its common stock. And the last The last use is acquire business and products, service, or technologies. For example, they propose the acquisition of more stock in exchange for shares of common stock. Twitter buy mobile for 350 million. Mobile's a startup that has a mobile publisher manage their ad inventories, so that will giving Twitter an advantage to build its advertising business, especially on mobile platforms. Move to the measure contents of Form S1. There are lots of contents in the Form S1 of Twitter, so we just decide to present some key contents. The first one is a growth strategy. Twitter decided to have a three strategies for growing its business. The first is expand user base through geographic expansion, mobile application, and product development. In product development, they decide to build and acquire new technology to develop and improve product. And the next strategy is expand platform partners through expand the Twitter platform to integrate more content. And they partner with traditional media to leverage media relationships to drive more content distribution. And the last strategy is expand advertiser through targeting, opening platform to additional advertisers and new advertising formats such as Twitter Cards and Twitter Amplify that allow advertisers to embed ads into real-time video content. So the next content is risk factors that affect the development of Twitter business. The first risk is the fail to grow of user base, and all users do not continue to contribute to the content, and second, the loss of advertising revenue. It will be affect deeply to the company revenue, and the inability to control interoperation with operating system, network, device, web browsers, and standards, and the fail to expand effectively in international market, and action by government to restrict access. They can have a negative publicity during development, and Twitter focus on product innovation and user engagement rather than short-term operating results. So the next part is the management system, and the table shows the executive officers of the companies. HPC that the CEOs hold 1.6% number of shares, and the resident of global revenues Adam Penn hold 0.36% number of shares. Business summary, they have a non-employee director, however, Jack Dorsey, however, chairman, and he has 4.95% of shares, while Evan Williams has the highest number of shares, 12%. The next content is the description of capital stock. All number is recorded on the end of June 2013. About common stocks, they have more than 472 million shares of common stock outstanding. Is held by 704 stockholders of record, and with the less than 0.1 per valuable shares. And about preferred stocks, they have no current plan to issue any shares of preferred stocks. And options, they have an outstanding option to purchase an aggregate of 44 million shares of common stock with a weighted average exercise price of approximately $1.82 per share. About RSUs, they have an outstanding of more than 59 million shares of common stock subject to RSUs with a weighted average grant day fair value of approximately $15.16 per share. And about warrants, outstanding warrant to purchase up to 116,000 share of common stock on an as a converted basis with an exercise price of 0.34 per share. And the voting agreement, they have a voting agreement with the RTLC, LCC, and Compliance Meta Service, LCC.
Now let's move on to talk about a couple highlights of Twitter's S1 filing. When you're looking at the Twitter's financial reports, you might think that Twitter's sales fell short of what people expected. The reason caused this is that the company has ever shared any financials with us. Therefore, you have no idea about how the company did in the past couple years. But marketers was estimating that the company would generate closely to 600 million in revenue by the end of 2013, which would represent more than 100 growth based on their analysis. In fact, this estimation make a lot of sense to me according to what we've been told by Twitter's S1. As you can see in the table, in their initial S1 filing, the company generated roughly 253 million in the first half of the year, and in their following amended S1 filings, it indicated approximately $422 million in revenue for the 9 months ended the same year. It sounds to me that although the revenue is a little bit shy, but we would have to say there was more of years to come for sure. The company also highlighted that of Twitter's revenue in 2013, 87% came from advertisement, which is actually not a surprise if you're operating business in such neighborhood, while the rest of revenue will come from data licensing. For advertisement revenue, Twitter pointed out three areas in particular. They were all promoted categories: promoted tweets, promoted trends, and promoted accounts. Promoted tweets is the obvious one to understand if you use Twitter. Tweets would become in your tweet feed and you can see them very well. It's very easy for you to engage with. Promoted trends basically is like Yahoo, where you were taking over the homepage. The chart in the left from Hobbs shows Twitter's increasing advertisement revenue over 10 quarters before filing their initial S1. In addition, the company also pointed out that they made $2.70 per thousand timeline views in US, compared to a rate of only 3 cents in the rest of the world. Speaking of the other part of the business, data licensing, we're more interested in how much they can generate, especially in long terms for the business to lessen the data stream that is Twitter. The interesting is that although Twitter was generating a lot of year-over-year revenue, it has never ended the year with profits so far, as it was spending a lot of to grow the business. As you may see in the table, although Twitter revenue has continued to grow from 122.4 million the first half of 2012 to 253.6 million the same period in 2013. The company, however, posted a net loss of 49.1 million in the first half of 2012 and wending its loss to 69.3 million the first half of 2013. The other highlight is that the Twitter has warned its revenue growth may slow down. can know why they make this statement by looking at their user numbers. Twitter in total got 218 million users in 2013, and of them, only 49 million in the US and the remaining is from the rest of the world. What the number mean? If we take a close look, we see that the user growth actually is slowing, and we believe that when we're comparing the user's growth, we should compare not year over year but sequentially. According to Bloomberg, the sequential user growth over the course of 2011 to 2013 has gone from as high as 33% sequential user growth to 9%, and in specific, 18% in year 2011, 11% growth in year 2012, and 6%, only 6% in year 2013. We're not trying to say that the worldwide growth cannot re-accelerated because we saw what happened for Facebook. But the thing is, if the potential user, not the potential user, if Twitter cannot absorb more new users, then they would have to come up with the plan to make their current users to spend more in order to ensure their business. Couple more interesting highlights. Twitter seek the trigger symbol TWTR for its shells, but it did not list an exchange in their initial S1 filing. And also, there is no off-balance sheet arrangement for Twitter. The very interesting we find that Twitter S1 includes some glitching according to New York Times. President Obama declaring victory in 2012 with a tweet.
For the next segment, we're going to examine Twitter's S1 registration statement. The S1 was first filed on July 12, 2014 with the SEC. It was about 143 pages long, without counting the exhibits and the financial statements that were attached thereto. Twitter was supported by the lead underwriter Goldman Sachs, as well as a consortium of additional major underwriters, including Morgan Stanley, JP Morgan, B of A, Merrill Lynch, Deutsche Bank Securities, and it was also supported by the leading Silicon Valley law firm Wilson Sonsini. After receipt of the S1 registration statement, the SEC's Division of Corporate Finance issued some 5 comment letters to Twitter, each of diminishing length, and each of those letters was in turn responded to by Twitter's counsel, and each generated an amended S1 registration statement. The S1 ultimately went effective on November 6, 2014, culminating a process that lasted just under 4 months for Twitter. It was a relatively quick IPO process. We next turn to some of the major issues that Twitter was facing going into its IPO. One was that Twitter was facing consistent operating losses, and in fact increasing operating losses in some respects, despite revenue and user growth. Accordingly, the S1 focuses significantly on Twitter's strong and broad user base. Twitter also published non-GAAP adjusted EBITDA financial numbers and other non-GAAP numbers, which showed more positive numbers and a positive trend line. So it's pretty clear why they wanted to use those numbers and wanted to feature some of those numbers as opposed to some of the GAAP measures, which were not so favorable. Twitter has a large number of users and platform providers, but it derives nearly all of its revenue from advertisers and is rather heavily dependent on those advertisers. A number of the SEC's accounting concerns, or concerns that are raised in the comment letters, appear to be in line with these particular issues that Twitter was facing. On the accounting side, Twitter's most significant issue appears to be accounting for advertising revenue. As mentioned earlier, Twitter obtains the vast majority of its revenue from advertisers. Some of the advertising revenue is dependent on user engagement, that is, whether the user actually responds in some way to the advertising by clicking on it or otherwise, and or pay performance, where the customer actually engages with the ad again or purchases the product. And Twitter's not paid unless that actually happens. Other revenue arises from an auction process, which determines the ad revenue, which is necessarily variable. The potential advertisers bid on how much they're willing to pay, and the high bidder is the one whose ad is ultimately featured on Twitter. But that necessarily leads to some question about how much the actually is going to be. The SEC comment letters. Our next topic. As I mentioned, the SEC issued 5 separate comment letters with a total of well over 50 comments. While the SEC made numerous comments, many of them related to some of the issues that we talked about in the last few slides. I'm going to go over some of the major ones. The SEC noted that Twitter had experienced significant improvements in operating results. That's what the initial S1 said. But the SEC pointed out that the Q1 results from 2001 showed higher losses, both from the past 2 quarters and also higher losses than the same quarter from a year before. Twitter was forced to clarify in its S1A that when it talked about significant improvement, it was talking about revenue, net profit or loss. Additional comments are that the SEC requested that Twitter make it clear that it didn't receive any revenue from platform partners. As mentioned earlier, they get almost all the revenue from advertisers. The SEC requested that Twitter explain why the non-GAAP measures were useful to investors. As I mentioned, Twitter focused significantly on some of these non-GAAP measures, and Twitter explained in the S1 amended that they actually use some of these non-GAAP measures for budgetary and operational purposes. The SEC asked for more detail regarding the measure of users because Twitter used a 4th quarter average, and Twitter provided a lengthy response explaining the reason it used that particular measure. The SEC also asked for more detail regarding the connection between the challenges with user growth and revenue growth, and Twitter added a paragraph in the S1A to deal with that issue. Again, Twitter was very focused on user growth and the number of users as a reason why its business was successful, and so the SEC really asked for some clarification on some of those issues. The SEC also asked for additional information about some of the accounting issues that we mentioned, the pay performance and or the engagement by the advertisers. The SEC asked for some significant explanation about that, and it's actually an issue that runs through multiple comment letters. Twitter would provide additional information about this, and then the SEC would ask for yet more. And it's because the revenue recognition policies on how to deal with these sort of unique arrangements where the advertiser only had to pay if the person who saw the advertising actually engaged and did something was sort of unique and interesting, and it's something that kind of where the company and its counsel went back and forth with the SEC significantly. The SEC also requested information regarding the auction process that set prices, and on that one, Twitter largely said that it didn't really have a whole lot about how its customers ultimately set their auction bids. Twitter's ultimate S1A registration statement ran some 175 pages, so it was about 32 pages of disclosure that were not included in the original S1. Some of that was offered by Twitter itself, and doesn't appear to be derived directly from some of the SEC comment letters, although a lot of it does relate pretty directly to the SEC comments.
To provide evaluation of Twitter, we were going to use 3 approaches, such as the dividend discount model, free cash flow model, and comparison to a competitor. Unfortunately, we couldn't apply the dividend discount model because Twitter has not paid dividends yet. Also, according to our calculations, free cash flow of Twitter was negative $2.7 million. As a result, we decided to focus on comparison to a competitor, and as a competitor, we decided to use Facebook. Facebook is represented on the chart by the blue line. Twitter is represented by the red line. As you can see on the chart, right after the IPO, Twitter began to chase Facebook, but eventually moved to the opposite direction. And currently, we cannot say that performance of Twitter is very good. According to the market data on November 26, Twitter's closing price was about $41 per share. Facebook's price was about $78 per share. Since Twitter is relatively new on the market, there is no information about the official beta of Twitter. But we did our own calculation and found out that Twitter's beta is negative 0.36. It tells us that Twitter's price goes in the opposite direction in comparison to the market. So if market increases, Twitter decreases. At the same time, we can see that Facebook's bet is lower than 1, and it tells us that volatility of Facebook is lower than volatility of whole the market. In last 52 weeks, lowest price of Twitter was about $30 per share, highest price was about $75 per share. Facebook's lowest price was about $46 per share, and highest price was about $81 per share. Market capitalization of Twitter is almost 10 times less than market capitalization of Facebook. Since Twitter didn't show any earnings last year, there is no information about price per earnings ratio. Also, since we didn't have any profits last year, earnings per share ratio is negative for Twitter. And as I already mentioned earlier, both companies don't pay dividends and can be considered as growing companies. According to the financial results from the previous year, we can see that Twitter was able to make revenue. At the same time, we can see that net income of the company was negative. It was due to huge expenditures on research and development. Also, we would like to highlight high long-term debt of the company and very low cash from operations. At the same time, we can see that company shows high level of capital expenditures, which goes along with the statement that company is growing. To provide ratio analysis, we decided to use 6 groups of ratios. As we can see, Facebook outperforms Twitter in each position, and most ratios of Twitter are negative. We would like to highlight gross margin, which is relatively good in comparison to Facebook's. But at the same time, because of huge expenditures for research and development, profit margin ratio of Twitter is very low. Also, we would like to highlight price per cash flow ratio. It is not a typo or mistake. It was due to very low cash flow, which Twitter were able to produce in the previous year. In comparison to Facebook, Twitter shows a not too bad position in assets management group of ratio. Also, we can see a higher level of debt of Twitter, but we can highlight a relatively good liquidity position of Twitter in comparison to Facebook. Taking in consideration all the ratios and performance of the companies, it is possible to see that Facebook outperforms Twitter, and probably Twitter is not very good candidate for any investments, especially right now. But we also can say that company is growing, and we can see that most their expenditures are related to research and development. So it is possible that the company will show growth in the future, but again, probably it is not good investment for the current time.
Now I'm going to talk about Twitter's stock price movement. As you can see from the graph, showing at the first 3 months after Twitter went publicly traded, price went up to the maximum of 74.73 US dollar because investors expected that Twitter would be a new growing company in the social market. However, after Twitter announced its revenue and performance for the last quarter of 2013, it has a poor performance, not as investor expectations. Stock price had been declining since then, even though its revenue increased by 116% compared to the same period in 2012. It made net loss of more than 500 million in the same period of time. Twitter had negative earnings per share of negative 1.79, also just 0.41% of returning in the market, comparing to the three major stock markets which have more than 10%. This leads to some Twitter issue. The last topic I will talk about Twitter issue. Since it went publicly traded, it didn't have a good performance as a major competitor like Facebook, therefore it raised some concern for investors that resulting in share price has been declining. Even though it could generate more revenue, it could only increase 9 million new users since it went publicly traded. Unlike Facebook at the same phase, Facebook user was growing more than 3 times than Twitter had. Another issue was about internal factor. There has been some news that Twitter co-founder and CEO sold their Twitter share. It might be some problem inside the company, as well as S&P 500 downgrade Twitter bond into junk bond rate. According to this all issue, Twitter should create some innovation and new marketing strategy to attract more users